What if I told you that one man's cold emails and tough boardroom letters could move markets and make billions? That's the story of Daniel Loeb, the activist investor behind Third Point. Hello world, I'm your host, Mr. Stagg. Today we're diving into Loeb's radical transformation of corporate turnarounds, how he selects his top 10 investments, starting with number 10, and what it all means for investors. If you're into hedge funds, bold strategy, or financial drama, this one's for you. Don't forget to like, subscribe, and ring the bell for more deep dives. Daniel Seth Loeb was born in December 1961 in Santa Monica, California. The grandson of immigrant grandparents and raised in a solid middle-class Jewish household, he displayed ambition early. Loeb attended Columbia University, where he majored in economics and began trading on his own account. By junior year, he'd earned roughly $120,000. A poorly timed commodity bet nearly ruined him, but that taught him his most valuable lesson: size your bets and manage risk. After graduating in 1983, Loeb entered the fund business, including a stint at Warburg Pincus. But his real moment came in 1995 when, with $3.3 million in backing, including $100,000 of his own money, he launched Third Point LLC. His strategy: deep value and event-driven investing, stake troubled or underperforming companies, demand change, and profit off the turnaround. Think Apple's Tim Cook on a breakup pill, or Nestlé performing better with better corporate governance. Loeb brought performance and fame. By the 2000s, Loeb had reshaped boards at Sony, Baxter, Massey Energy, and more, all via his signature open letters: sharp, public, and effective. Today, Third Point manages around $20 billion, including roughly $6.5 billion in US equities reported on 13F filings. Third Point is more than just equities. It spans public stocks, credit, private equity, and insurance. The balance sheet shows roughly 45 public equity holdings, an activist trading credit portfolio through Birch Grove, and a London-listed holding company in TPRL focusing on reinsurance strategy. The fund's flagship has two core goals: alpha through activism and non-correlated returns via credit. Much of the public equity traditions follow Loeb's standard playbook: stake, press, boardroom, exit. The credit and private arms offer stability and diversification. Importantly, this multi-pronged approach gives Third Point resilience in volatile markets. As of 2024, Loeb's estimated net worth is around $3.5 billion. And now his fund's top 10 positions, that take up nearly $3.25 billion of public equity, tell us a lot about where he thinks the economy and America is headed. Number 10, Corpay, $213 million. Corpay is a fintech provider facilitating cross-border corporate payments. It's a shell in Third Point's portfolio, but offers fintech upside, an area Loeb watches closely. Number 9, Kenvue, $213 million. A spin-off from Johnson & Johnson, Kenvue markets consumer health brands like Tylenol and Aveeno. Its sticky pricing and volume in health markets fit Loeb's value criteria. Number 8, Flutter Entertainment, $215 million. This multinational gaming and sportsbook firm includes brands like FanDuel and Paddy Power. Loeb is attracted to recurring revenue and regulated growth. Number 7, Brookfield Corp, $222 million. Brookfield is a global asset manager owning real estate, infrastructure, and renewable assets. This plays into Loeb's need for stable cash flows and long-duration value. Number 6, CRH plc, $239 million. CRH is Ireland's building materials giant, big on concrete, cement, and aggregates. Loeb wagers on global construction revival, especially in infrastructure. Number 5, Telephone and Data Systems, $262 million. TDS is a US telecom provider connecting millions with cellular and data services. Loeb sees the long-term potential in stable communication infrastructure. Number 4, Live Nation, $274 million. The giant behind Ticketmaster and concert promotion worldwide. Loeb expected live entertainment to rebound post-pandemic. He was right, and Live Nation profits soared. Number 3, TSMC, $296 million. Taiwan Semiconductor is the world's most valuable chip foundry, producing semiconductors for Apple, Nvidia, and more. It's Loeb's anchor in the megatech supply chain. Number 2, Amazon, $447 million, the global retail, AWS, and logistics powerhouse. Loeb identifies Prime Video, cloud revenues, and scale as catalysts. He also knows activist moves can still shift corporate culture. Number 1, PG&E, $878 million. Top of the list is PG&E, the California utility serving over 16 million customers. Despite wildfire liabilities and bankruptcy risk, Loeb sees steady regulated returns and underappreciated fixed income value. Loeb isn't just a shareholder, he's a force. He's engaged management at Live Nation for better radioactive RSVP programs. He's pressed PG&E for capex discipline and balance sheet repair. He urged CRH to optimize its portfolio. Loeb's portfolio tells a clear story. He's leaning into big tech, betting on healthcare innovation and staying defensive with cash-like assets. His picks suggest confidence in the US economy, a belief in innovation-led growth, and a readiness for market turbulence. Unlike trend-chasing meme investors, Loeb focuses on operational excellence, moats, and shareholder returns. He's also known for exiting quickly if the thesis breaks. So every holding is a calculated risk. When he steps in, the market listens and often reacts quickly. He's also not afraid to wage fights. In past battles, he's threatened lawsuits, board votes, and structural breakups, just to unlock latent value. That's why many of his stakes come with insider knowledge and spoilers into what's next. Loeb once said, "The market doesn't care about how smart you are, it cares about whether you're right." His approach is pragmatic, aggressive, and deeply research-driven. He writes brutally honest letters, but often follows up with constructive engagement. Under his guidance, Third Point has turned around companies, unlocked value, and challenged lazy management. His mix of conviction, contrarianism, and timing has earned him a place among the hedge fund elite. Beyond stocks, Third Point is growing in credit and reinsurance. Its acquisition of Birchgrove gives it $8 billion in credit positions, distressed assets, and CLOs. Meanwhile, TPIL seeks to become a holding company in reinsurance through a Malibu Life acquisition. If successful, Loeb intends to deliver more yield through underwriting profits, though he faces criticism over governance. Macro backdrop: markets face rate uncertainty, snapping supply chains, and geopolitical disruption. Still, Loeb's positioned to push both long-duration plays like TSMC and short-duration alpha like PG&E restructuring. He expects 2025 to be event-driven, and Third Point is ready. Daniel Loeb transformed small capital and big ambition into a hedge empire. With bold activism, smart diversification, and deep conviction, his top 10 picks give us a glimpse into his strategic mind. Thanks for watching. If you enjoyed this breakdown, like, comment, and subscribe to Stag Research, your hub for finance, deep dives, and hedge fund secrets. What stock should Loeb buy next? Let me know in the comments. Mr. Stag, logging off.